Welcome back to the Wall Street Podcast. Today, we're digging into the Wall Street Journal from Tuesday, July 29, 2025. Our goal, as always, is to pull out the key financial, economic, and corporate insights for you quickly and clearly. Let's jump in. So, first up, the big picture. Looks like a preliminary U.S.-EU trade deal has, well, maybe stopped a trade war for now.
It seems that way, yes. Averted the immediate blowup.
Okay, so what's in it? A 15% baseline tariff on most European goods. And wow, the EU is committing to buy $750 billion in U.S. energy.
Yeah, huge number.
And invest another $600 billion here.
Yeah.
Markets reacted well, right? New records for NASDAQ and S&P.
They certainly did. A definite short-term boost. But, is it just a quick win? I think it signals something deeper.
Deeper how?
Well, this agreement, it hints that this U.S. tariff approach might be sticking around longer term. It's not just crisis version. It's really pushing companies to fundamentally reconsider their supply chains, maybe favor U.S. locations more. The long-term strategy shift is the real story here, I think.
Okay. And you can sort of see that ripple effect in some of the corporate news, like Samsung landing that massive $16.5 billion deal, AI chips for Tesla built in Texas.
Exactly. That fits right into the narrative, doesn't it?
Yeah.
Investing in critical tech onshore. It's a direct example of that potential supply chain rethink.
But then you have Audi.
Right, the contrast.
They cut their full-year guidance, and they're pointing fingers directly at U.S. tariffs, restructuring costs, weak markets.
Yeah, it shows the friction, the real costs involved when these trade policies bite. It neatly illustrates the winners and, well, the losers in this changing environment. And speaking of corporate moves, we also saw shareholders at Wise, the fintech firm, back their CEO's super voting rights for another decade.
Locking in founder control. Interesting governance angle.
Very much so, especially in these fast-growing tech companies.
Okay, let's shift gears a bit. U.S. debt strategy. The Trump administration is apparently pushing for short-term borrowing, like 6 to 9 month debt.
That's the plan, yes. The idea seems to be waiting out the Fed, hoping for lower rates before locking in longer-term bonds.
But the deficit's already running at, what, $2 trillion a year? Is this smart timing or risky?
Well, that's the multi-trillion-dollar question, isn't it? Trying to time the market with sovereign debt is inherently tricky. Saving on interest is the goal, sure, but it could inject uncertainty, maybe even push long-term rates up if investors get nervous about the strategy. It's high stakes.
Definitely sounds like it. Okay, now on the consumer side, there's this weird situation. Credit card rates are sky high, over 22% on average.
Stubbornly high, yeah.
Yet the amount people are actually paying to service their debt as a share of income is historically low, around 11%. How does that work?
It suggests maybe strong wage growth is offsetting it for many, or perhaps households are just managing their overall budgets very carefully, despite those high rates on cards specifically.
Interesting. And then there's this Genius Act, just passed, formalizing dollar-pegged stablecoins.
Big move in the digital currency space.
Requiring full cash or treasury backing, U.S. licensing. What's the significance here beyond just crypto regulation?
Oh, it's strategic. It's really about the U.S. ensuring the dollar stays dominant, even as finance goes digital, extending the dollar's reach, and, importantly, its perceived security into these new areas.
Right, maintaining influence. And related to future finance, women's financial power is growing significantly, projected to control 40% of U.S. assets by 2030.
That's the projection. And studies are showing that women-managed investment accounts often perform better on a risk-adjusted basis.
So what does that mean for the industry?
You have to expect a shift. More focus on long-term discipline strategies, maybe different kinds of advisor relationships built more on trust and achieving specific goals rather than just chasing returns. It could reshape wealth management.
Let's pivot quickly to the U.S. and global snapshot. Federal judges are still issuing these nationwide injunctions against administration policies?
Yeah, even after the Supreme Court tried to limit them.
So legal challenges remain a powerful tool.
Absolutely. It underscores the judiciary's role as a check on the executive. It shows that broad legal relief is still possible for plaintiffs, whether it's about immigration or, say, government layoffs. Rule of law in action.
Okay. And internationally, President Trump announced a U.S.-European effort for food aid to Gaza, called the Situation Terrible.
And that was notably different from the Israeli PM's assessment.
Yes. Also, Trump seems to have given Putin a shorter deadline, 10, 12 days, for a ceasefire in Ukraine, threatening more sanctions.
And more economic pressure, right? Tariffs, secondary sanctions mentioned.
Domestically, though, some tragic news. A shooting in a Manhattan office tower, 4 dead, including a Blackstone exec, plus the gunman.
A stark reminder of urban safety concerns, even in major financial hubs. Very concerning.
And one more on oversight. Scrutiny on Demotech, the rating agency for insurers.
Yes, their A ratings are under fire after some insurers collapsed in places like Louisiana, leaving unpaid claims, especially with growing climate risks.
Highlights the importance of those ratings agencies, even smaller ones.
Definitely. And speaking of tech and risk, Amazon's apparently exploring an always listening AI bracelet.
Always listening raises immediate privacy flags, doesn't it?
Huge privacy considerations.
Sure.
It's part of that ongoing tension with advancing AI capabilities, a conversation that's only going to get louder.
And just briefly, two interesting feature notes. Monet's gardens at Giverny restored, largely thanks to U.S. donors.
Nice piece of cultural news there.
And the passing of Ozzy Osbourne sparking discussion on how perceptions of public figures can change over time.
Indeed. Time does shift perspectives dramatically.
So wrapping up today's deep dive, we've touched on major economic shifts, corporate moves, global events.
Hopefully giving you a valuable shortcut to staying informed on these key developments.
So here's something to think about as you process all this. How might that increasing financial power of women, combined with the U.S. actively working to keep the dollar central in digital finance, how will those forces together really reshape our economic landscape in the years ahead?